Do you think that in order to become a millionaire, you have to have extraordinary skills, an above-average salary, or powerful connections? Well, the answer to all that is a resounding no. The truth is, anybody can become a millionaire. And most millionaires are in fact just middle-income workers. But how have they got there? Surely some of them launched and grew one or more successful businesses. Some others simply inherited a fortune, and a few of them even won the lottery. But the vast majority got there by regularly investing a portion of their salary in the stock market. We hear what you are thinking. We don't have much money to invest. Don't worry. In this video, we're going to show you how becoming a millionaire is a lot easier than you think, even if all your savings amount to just $100. It's so simple that literally everybody could do it. But because it takes time and discipline, very few people will actually do it. So make sure you watch this video until the end, as this could literally transform your life. But before we start, let us ask you a question. Would you rather have A, $100,000 right now, or B, a penny a day doubled for 30 days? If you answered B, then you are lucky. It turns out that a penny a day doubled for 30 days adds up to more than $10 million. Sounds crazy, right? Even more so when thinking that after 10 days, your initial penny would have only grown into $10, and by day 15, to $328. How is it possible then that doubling from day 0 to day 15, your penny has only grown into $328, and then these $328, doubling every day, would grow into over $10 million from day 16 to day 30. This is because of the compounding effect, which is arguably the most powerful concept in the world of finance and investing. There are, in fact, two main ways to accrue interest: simple and compound. Simple interest is when you earn interest only on the principal. So if you have $1,000 invested at 10% interest, you'll earn $100 every year. Compound interest, instead, is earned on the principal and the interest in your account. Give it enough time, and your capital will grow exponentially. Now, let's get back to our promise. Let's assume that all you have available to invest is $100. You currently earn minimum wage, and want to become a millionaire by the age of 65. At the day this video was being published, the US market had an average annual return of 13.8% from the past 10 years, slightly above its historical average. So let's assume that investing in the stock market will give you a 13% return over your investment. How much do you need to invest each month to become a millionaire by the age of 65, thanks to the power of compounding? Well, if you are 20, all it would take is you investing $44 a month, or in other words, less than $1.50 a day. This sounds like something you could do, right? What's even more fascinating is that $44 per month, invested from the age of 20 to 65, amounts to a total of just $23,860, meaning that your investment return is about $980,000. Take a moment to let this concept sink in. Over $980,000 earned, and you did not have to work a single minute for it. All you had to do was save $44 a month, religiously invested in the stock market, and let it grow. Now, if you're older, let's say 30, things get a bit more difficult because you have less time to let the power of compound interest work in your favor. In this case, in order to become a millionaire by age 65, you would need to invest $152 per month, which is still pretty doable for most people living in Western society. If you are 40, then you would need to invest $535 per month, so as you can see, the earlier you start, the easier it will be. And of course, regardless of when you start, increasing your savings rate can get you to a millionaire a lot earlier than 65. But at this point, You might be wondering, is it safe to invest in the stock market? Isn't there a risk of losing money? And surely, investing in anything presents some risks. However, these risks are a lot lower than you probably think. In fact, if you take a look at this chart showing the growth of the Dow Jones Industrial Average since 1990, as you can see, there were a few bumps along the road, but the upward trend is relentless, and the market always goes up in the long term. Even the crash of the 2008 financial crisis was recovered pretty quickly. So was the sharp pullback from the COVID outbreak in early 2020. But how can the market always go up? Well, this is because of one basic reason. The market is self-cleansing. Companies routinely fail, fade away, and are replaced with new, growing ones. If you think about it, in the worst possible scenario, a stock can lose 100% of its value. Then, of course, it disappears, and as new companies grow, prosper, and go public, they replace the dead and dying. Now, what is the best performance a growing stock can deliver? 100%? Certainly that's possible, but so is 200, 500, or 10,000% or more. There is no upside limit. That is why regularly investing in the stock market will make you rich in the long run, provided that you are disciplined enough to contribute to your investment regularly, focus on broad index funds, and avoid investing in individual stocks, at least until you have a very good expertise, and do not panic sell when the market retreats or crashes. This is an absolute imperative, and the number one reason why people lose money in the stock market. So remember that the earlier you start, the easier it will be. There will never be a better day to start saving than today. Even if you can only save and invest a tiny amount, you will be a lot better off than if you never started at all. If you want to fast-track your way to becoming a millionaire, then please click on the subscribe button and turn on the notifications. For now, thanks for watching High Living, and see you next time.